this monthly Rask Invest Portfolio update, mate. How you going?
I'm good, Owen. How you doing, mate?
Pretty good. Pretty good start to a
Cool, eh?
Monday. I don't know about you, but it feels like when it's 12 on a Monday, it still feels like it's 9 a.m. Like I feel like I haven't got started, but that's how I'm feeling.
Wait until you have kids, Owen. Your day gets started a lot before 12.
Yeah.
You've already fought 3 or 4 wars before before getting him out the door, and you can start to be an adult from 9 a.m. onwards.
Okay. Well, I don't have much to complain about. I must admit, I did get a walk in with the dogs down at the cafe this morning, so that's my battle. Dealing with an unruly Groodle. But mate, we are going to be talking. And g'day to Troy, g'day to Patrick, who have already made a comment. If you can hear us, let us know. Yeah, we're going to be talking about the Rask Invest portfolios, how they've tracked over the month, some of the things we've seen, and go from there. G'day, Justin. Good to see you again, mate. I don't know how you managed to fit it all in, Justin.
Hey, there's
or,
Mike.
or you, Mike.
G'day, Mike.
Yep. It's great. So this video will be available for replay. It will also be emailed out. Everyone that is an investor with us can get this recording.
Hi. G'day, Sona. Good to see you there as well.
Yes. Mate, now I'll hand it over to you, but the most important slide,
slide that anyone will ever see today
is not this one.
It's not this one.
It's this one.
It's this one. So I'm going to read it today. But Owen reckons he can actually read this word for word without looking at it. So I'm going to read it today, but next month it's going to be Owen's turn, and we'll all judge him on his accuracy on the disclaimer. So the information in this presentation is general financial advice only. That means the advice does not take into account your objectives, financial situation, or needs. Because of that, you should consider if the advice is appropriate for you, to you and your needs before acting on the information. In addition, you should obtain and read the product disclosure statement and target market determination before making a decision to acquire a financial product. If you don't know what your needs are, you should consult a trusted and licensed financial advisor who can provide you with personal financial product advice. Please read our terms and conditions and financial services guide before using this website. Rask Invest is considered a financial product and has a product disclosure statement and target market determination issued by InvestSmart, the responsible entity of Rask Invest. These documents can be accessed on the Rask Invest website. Please seek professional advice before making any investment decision with respect to Rask Invest. I highly doubt, Owen, that you can actually read that word for word. Recite that word for word.
Yeah, it's maybe my own sprinkling and a bit of extra sauce on top, kind of like a chef, 2 teaspoons, 2 tablespoons. I mean, what's the difference?
Are you saying like a disclaimer is kind of like someone's bolognese recipe? No, two people have the same disclaimer.
If it tastes good and it hits the mark, that's what I'm saying. But anyway, mate, that was really well done.
Thank you.
So, okay, Justin's already come through with a nickname feature. That would be interesting. Yes, I like this. Today we're going to cover some highlights and reflect on the month as per usual. We'll go through any updates to the portfolio. We're going to maybe talk a little bit about bonds. We've got a couple of things that we wanted to share that Mitchell is seeing in speaking with everyone. And then we're just going to answer questions. So we don't have as much on our plate this month, not to continue the recipe analogy too far, but we don't have much on our plate this month because we haven't made any changes given the changes that we made and implemented last month. So there was a bit of volatility in the August month, which we did talk about in July. Today, you're joined by myself and Mitchell. Chances are, if you haven't already booked a call with Mitchell, you will speak to him sometime in the future. And if you're on our mailing list and an investor with us, you will receive emails from either one of us. This one here, this slide is just why do people invest with us? We can probably prepare something separately. If you want to know a little bit more about us, obviously you can go into all the legal stuff like the PDS and the TMD. Those are both available on our website. But by now, most people that invest with us have known Rask for a very long time, or at least that's what I feel like, and have been familiar with our podcast, our education, our articles, our reports, our events, whatever the case may be. Mitch, would you add anything onto that of why people invest with us?
I think they kind of generally fall into two camps. The time poor is a major one. Being time poor, their people are growing their career, they're growing their family, they're doing both. That takes up a lot of time, and so they understand investing is important, and so they look to outsource that to someone that they trust. They've been listening to you, Owen, for a very long time, and feel part of the family. And the other group of people who come to us are, generally speaking, they're older in life. They've been managing their portfolios with the level of success. They've got a diversified ETF portfolio, but they often feel like that portfolio has lost its way, as in they lack a sense of direction. And the question is am I on track? Is my portfolio, and does it have the right diversification, etc.? That's the questions that they're asking themselves. And quite often I'll see an account open with us and a transfer of assets take place to fund the account. So they'll transfer in the existing ETF portfolio, which we'll then tinker with to get it in line with our appropriate models.
That's actually a good question. From what I've seen in the data, Mitch, and correct me if I'm wrong, is that some of our biggest balances in terms of the people that invest with us have actually been those people who already have a portfolio and then they transfer it across to us so they don't incur a lot of the usual capital gains tax or those frictional costs that they might otherwise incur. And effectively, they've just gone, I have a portfolio of ETFs. It's very similar to what you already manage. Here you go, take this. And that can be their, I guess, investment with us. Is that fair?
Yeah, that's right. Of our larger accounts, which predominantly are SMSFs, they are transferring across ETFs and in individual stocks. One thing I do, if people are considering starting their investment with transferring assets in, they just got to be aware that from our job is to ensure that your account tracks the model that you've chosen at all times. So that's Jupiter for our high growth, which 70% of our investors are in, Martian and Terra, right? So from day one, if it's cash, if it's stock, we need to ensure that your account aligns with that model. So if you're transferring in ETFs that you might, for example, hold for your Australian equities, you might hold IOZ, the iShares S&P 200 ETF. But we in the models hold VAS, the Vanguard ASX 300 ETF. We will sell. What doesn't align with the models gets sold on day one. There's no finessing with it, et cetera, et cetera. It's just bang. And so we bring you in line. Now, most people who are doing this have actually followed the Rask portfolios for a while. And so they're transferring in very similar-ish portfolios that need just a bit of tinkering. And so we're able to do that relatively tax effectively. So it's not like if you're going from a managed fund into another managed fund, it's sell one, buy another. So you're experiencing a full tax event there. But with us, we can trim around the edges and minimize that tax event for you.
Yeah, that's great. Thank you for covering that off. So I was going to say, it was maybe a few weeks ago. So we've obviously got the 3 strategies, but every month when we jump on here, we talk about the potential addition of a 4th one. When you and I were just talking off air about this, there will be a few more updates for folks, but we are looking to introduce a kids strategy within Rask Invest, probably in the next, say, 2 months. That's us being conservative. We are looking to do we are doing a big rebrand of Rask that will begin to unwind in about 2 to 3 weeks. So it's start to unwind. So you will see a completely new brand from Rask. We've talked about this a little bit. You'll see different websites, different inclusions, different things that even the podcasts that you hear will change. As in they'll be tinkered with and feature new designs and these types of things. So we figured as we're doing that and as we're revamping our digital presence, we may as well look at doing things like this. And a big reason for this comes from people like Justin and like other people in our community that have said, hey, I'm looking to build wealth, not just for me, but for my family. How can you do that? So we're looking to build a strategy that would sit alongside these, the predominant ones that are used inside SMSFs or individual investors, family trusts, holding companies, these types of things that people tend to set up. Mitch, is there anything else that you would like to add on Luna, the potential kid strategy?
Yeah, so as everyone knows, investing for kids can be a bit of a minefield when it comes to tax, and understanding if you should set up an account in your name as trustee for the child with your tax file number, or get a tax file number for the child, and you can be hold the account in your name as trustee, but the child is paying the tax. The kids' tax rates are incredibly high.
Yep.
And so setting up Luna, Owen and I have spoken about this, and we've spoken about this on these live shows. I feel like we've been teasing Luna for at least a month now.
Yep.
The idea behind it is incredibly long term. Okay, a portfolio that you can dollar cost average into. So for people who are saving on a regular basis for their kids, I know, for example, my 2-year-old has got a brokerage account, and my 2-year-old, my mum actually has the account details, and she every now and then I log in and she's popped more cash. She's whenever she's feeling generous, puts cash in there, and so dollar cost averaging is really important. Having a reasonable spread of assets, but also ensuring those assets have low turnover. So we don't want to be jumping into an ETF that is rebalancing really regularly and crystallizing tax events internally in the ETF, which are then of course passed on through to the investors. So that's a big focus of ours for this portfolio.
Yeah, it's I think that's kind of the key things is ease of use, and then tax optimization with that long-term growth perspective. And it's something that's easier said than done, because as we know, getting tax advice alongside financial advice or one or the other is actually quite confusing, because the accountants don't want to talk about the investing, the financial planners don't want to talk about the tax. It's a bit of a weird thing. So you end up in this kind of, I think this is the right type of thing. But we're going to try and hopefully bring a bit of clarity to that over coming months.
One thing as well, when I talk about investing for kids with people, we talk a lot about, holding the assets and investing for them until they turn 18. But if you can think about it, like, I don't know when you got started investing, Owen, but 18 would be very, very young for someone to actually get started on their own personal investing journey. And we all know, I know if you ask, I think it's about 90% of the fund managers that you interview, when you say, hey, right, what's the one thing that you wish you could go back and tell your younger self, that final question that you ask them all the time, time is the one thing. They all wish they went back and said start earlier. So I'm thinking of this, especially for my son, this is something that I actually, it's not 18, when he turns 18 is not the end point. This is something that he's going to continue on with himself for the rest of his life. And hopefully it's something that me and him will be able to have in common and talk about as well.
Yeah. Yeah, great. That and a love for Melbourne Zoo. No doubt.
If anyone was there on Saturday, you would have seen Wilbur frolicking around the water featuring the lions.
An internally running joke is that Mitch spends most of his time at the zoo these days. But this is the monthly performance. We put attribution up here, or contribution, because you could basically, what we want to look at is, as the portfolios as they've performed, what's performed well. The monthly figures are these ones. So I probably should have just done a little bit of a highlight here. Maybe I'll bring these up in just maybe a blue color or something like that. So these are the monthly figures here, and we can talk through them. But you'll notice that we've also put a bit of a yellow star, Rask Invest yellow star or blob, let's be honest, next to the bond ETFs, because I want to call these out this month. We start with since inception numbers up the top here. So this is since the 31st of March, 2024. There were only a couple of investors that actually had money in the portfolios right about that time. One of them is obviously us internally with our money. But for most people, that's probably a good thing because they've actually done better than the since inception numbers, because the first month or so was a little bit shaky. So you can view all the numbers every month, either in your account. So if you come in here, you can see the return, or if you you're not even invested with us, like say, for example, you're a Rask Core member, you can get that inside Rask Core, or you can just come to the Rask Invest website and you can see the different results per period here. So for example, 4% for a 3-month versus 2.14 for a since inception figure. But obviously, it's still early days, no matter what we talk about. But what we've already seen over the last few months is a few really good lessons on diversification and building a portfolio. So, for example, in that first month, there was a bit of volatility. Aussie shares, you might remember, fell a little bit because people were thinking, oh, interest rates maybe won't be cut. Then in that next block of time, we saw the US stock market rally as it looked like interest rates would be cut. It looked like, there was the whole Biden-Trump thing happening, and it looked like investors, it was going to be pro-investors from an economic perspective, but also from a political perspective. And more this month, what we've seen is kind of a moderation and a continuation of people thinking that interest rates will continue to fall, and in particular, fall in the United States. It looks like in the United States, interest rates would be cut before many other places in the world because inflation during I think it was July or August, was 2.9%, which is really reassuring, together with, for investors, that's reassuring, together with an uptick in unemployment. So on our platform, if you scroll down, you can read Pete's latest monthly update. And in particular, he talks about employment edging up, and he talks about expectations for yield and for bond yields and these things coming down. So there was a question at very start from Patrick, and maybe this is the perfect segue for us to talk about this, Patrick. So thank you for reading our minds. Can you briefly touch on the relationship between inflation, interest rates, recession, and jobs, and how they might influence the market? So a good illustration of this is during the month, our most conservative option, which is Terra, which is 50-50, performed the best. And normally when people think of long-term investing, they automatically default to the highest growth one. And by that, I mean the one that has the most shares in it, basically. But over time, and depending on which time frame you look at, it might actually not perform best. And I'm not just saying from 1 month to the next. I'm saying over 2, 3, 4, 5 years even, it may not perform the best. There are instances where shares don't do as well as other asset classes. But during the month, we can see it play out on a micro level. And this is where a very basic understanding of how bonds work, and in particular government bonds, which are these ones. IAF is the Australian one, and VBND is the global one, or mostly US. And every month when Pete does his update for us and covers all of the macro insights you need to understand, he actually walks through the major drivers and how they're all linked together. So in particular, when the economy starts to falter, the central bank in the US, that would be the Federal Reserve, or in Australia, the RBA, when the economy starts to falter and looks like it could be edging towards a recession, interest rates will be cut. And the reason why is that when interest rates are cut, it makes people more willing to spend, more willing to invest, more willing to take their money out of the bank and do something with it, which stimulates the economy. So it kind of re-stimulates it. So obviously, if unemployment goes up, it means that more people are out of a job. And so that's an example. It's a really strong indicator of the economy heading towards some bad times. And that was illustrated here in COVID. You might remember, Mitch, all those lines in the US of people getting like the government handouts and unemployment benefits and that sort of stuff. We don't really have the same thing here, although we did see Centrelink.
We did, yeah. I remember seeing Centrelink on the news. The lines were around the block. A lot of people standing there being interviewed by the reporters saying, I never thought I'd see myself here.
Yeah, well, yeah. So we did see it in this instance. But you can see that was this temporary spike in employment. And if you go back to that time, we'd basically been near zero interest rates, particularly in the US. This is the US. And what the government basically had available to it wasn't to cut interest rates any further because they'd already done that, but it was to pay people stimulus checks. And so that's why we saw, you might see a very, very like pronounced example of this. Stimulus checks were given by the government. Frothy tech stocks went straight up. Stocks like Nvidia, Zoom was one of the best performers at the time. Even like companies like Trade Desk. So I think it's Zoom stock. It's a ticker symbol. So at the time, everyone was stuck working from home, and we saw this. So and then it's come back down for let's call it a smooth landing for Zoom shareholders. So that's basically an illustration of how things like the economy impact what decisions are made at a government and Reserve Bank level. But probably the one that still confuses people a little bit is, why do bonds go up when interest rates haven't moved yet? So like, why would that happen? So for example, why would US bond ETFs go up when that's the interest rate? And the reason is because when there's a linkage here that you need to understand, which is the difference between the actual interest rate and the expected interest rate. And so most of the time we look at something called the 3-year government bond yield, or in the US 3-year treasuries. Basically what this says is, at a point in time in the future, what's the expected interest rate going to be? So this is all the bonds that are issued by the government. Because obviously if you're lending money to the government, that's a bond. That's what a bond is. You're basically saying, I want this return for 3 years. And so you're not going to lend them a higher amount of interest than you should, because you expect interest rates to come down. So you can see this here, that it's fallen. This is the Australian one, to 3.5%. And you can see over time that that's fallen down this kind of curve. That's why our Australian bond ETF has done this. That's why it's gone up. It's not because interest rates have changed. It's because of the expectations of interest rates have changed. And so this is the part where people get a little bit confused, Mitch. But this is the benefit of having bonds in your portfolio before the change happens. That's the key thing. You want it in there before the change happens, because you will benefit from the bond ETF itself going up, but also from the interest rates that will be going through that ETF over time. And you'll get a bigger and bigger payment as those bonds pass through the ETF. So that's what we've seen over the month. I won't labor on it too much more, but basically you can see that the US ETF, obviously from earlier in the month, nearly recovered all of its gains, but did struggle month over month. And the real winner was our bond positioning. So that's what you can see. That's why the Terra portfolio did better, because it's more conservative and it has more in bonds than the other two. And that's why you can see the return spread like that. I don't know if I think that makes sense, Mitch, but tell me if I missed anything.
No, I think you're good. Yeah. So August was the month that we first actually saw our first decent bit of volatility come through the portfolios. You can see that there, especially say in Jupiter, with IVV being being knocked around a little bit. Now, the first couple of days, I think there was a 5-day period where IVV fell approximately 5 to 6% in the first few days of August. And true to form, if you have been watching these monthly updates since, there it is, and since it recovered a little bit there. If you've been watching these portfolio updates since we started, when I was first, we would talk about the conversations that I've been having with our early investors, and me saying that absolutely every single one of them was sitting back hoping for a bit of volatility to put more cash to work. Now, the easy part is saying it, the hard part is actually doing it. But I'm really pleased to be able to say that in the month of August was our largest month of inflows into the Rask Invest portfolios. We're now up to over 130 investors with Rask Invest. And also for the month of August, we saw an additional into pre-existing accounts, over $800,000 be added in just top ups, so people making contributions. And a big chunk of that came within those first few days of the month of August, where we saw that volatility. So people looking to put additional cash to work aside from their usual regular contribution plans and things like that.
So an extra $800,000, and a lot of it when that was happening.
Yeah, it was
That's
predominantly great. Around the first week of August. So people seeing that volatility actually come through and putting some additional cash to work. So I have always been a bit cautious about saying yes. Wait for the volatility and jump in and buy, simply because we don't know when it's going to occur. Of course, we saw that volatility early on in the month of August, and then it petered out. It didn't really. There was a couple of days, and then it was back to business as usual. And so there's a lot of great sayings. I think it's Peter Lynch. I always get Peter Lynch or Howard Marks confused. By a saying that one of them has: more money is being lost waiting for corrections than in corrections themselves. And was it Lynch? Was it Peter Lynch? Yeah.
Yep.
So what Lynch was referring to there is the opportunity cost of sitting on the sidelines and just waiting for a correction before you actually invested, rather than just getting invested, staying invested, earning dividends and capital growth.
I love it. Yeah. I love the one that everyone's a high growth investor until the next market crash. We become familiar with stock markets going up and we're all high growth, and then all of a sudden it collapses, and then now we've all of a sudden dialed back our risk. There are so many different things that come into play from a behavioral perspective. People, for example, I reckon if we had launched Rask Invest during a recession, instead of 70% of the investment accounts being in Jupiter, I reckon 70% would have been in Terra. To give you an example of how that might have played out in action. And I think that's kind of what we'll see, a more even spread amongst them as time goes on. Another good one, Mitch, is when this is just an example of it. We were having people through this period when we just launched Rask Invest tell us how expensive the US stock market was and that we probably shouldn't be investing in money printing, Bitcoin. We basically had at least one person or 10 people tell us everything that we could possibly hear. And people were this whole time telling us that it was going to fall. And sure enough, it did fall in this point, and people look really smart. But over the long term, as you zoom out, yeah, sure, people might be correct. But in the meantime, you've lost a lot of money just by holding off. Now, all of that said, I'm actually really, really pleased with what you just told us about the portfolios attracting investors in the way that they were in early August. I think that's a testament to everyone that we've got in the community and the types of investors that we have. But the good thing also is that our portfolios will hold up better. Now, obviously, we say past performance is not indicative of future performance and all that type of stuff. But compared to a standard stock portfolio or stock plus property portfolio, our portfolio should hold up better because it is diversified, not just across the different asset classes, but also within them. So instead of having, one bond or one active fund manager who goes and makes a decision, there's hundreds of bonds, there's hundreds of shares, within the ETFs themselves. So for me, I would expect our portfolios to hold up. Obviously, I'm disappointed to see a negative here, but obviously that negative's coming after some pretty good positives. So I'm quite happy that there would be fluctuation in the portfolios over time. Right now, you can log into Rask Invest, which is just invest.rask.com.au, your usual login. And I would encourage everyone to read this update about the time to pivot. This is basically a discussion about what we've seen recently and how we could actually be in store for maybe not interest rate increases, but interest rates plateauing. For example, here in Australia, some of the banks have already started cutting the variable rates on their mortgages. So that's a really strong sign to you that if the banks are saying, hey, there's a pretty good chance we're going to, start to see a moderation in interest rates, that's them actively telling you that they think on the balance of probabilities, the next move in interest rates, even if it's not this year, is probably down. We've also released 2 updates over the past couple of weeks. You may have read these already, but one of them that we're getting very commonly is, should I pay off my mortgage or invest? Another one is what happens. It's like kind of lump sum investing, life after property, so to speak, preparing for retirement. I wrote this article and guide a little while ago, and so far we've had a lot of people reach out to say, hey, that's me. I'm in that boat where I've got a lot of my wealth in property. What should I do? How should I do it? There was a comment here from Silvio. And Silvio, if you are still watching, I would appreciate you explaining what you meant here. They approached someone that to set up an SMSF. That SMSF provider collapsed and took some of their investment and life savings with them, which is never a good thing, obviously. So we feel for you, Silvio. But what we have at Rask Invest is we do have a lot of people that have SMSFs already set up coming to us. That's been a really popular thing. People just wanting to simplify their self-managed super fund. So regardless of the way that you invest with us, whether it's your individual name or your SMSF, I think we're going, personally, of course I'm going to say this, you're asking the barber for a haircut, but I would say that we're going to capture more and more and more SMSFs over the next few years because people will be drawn to our simplicity, be drawn to the transparency that we bring you every month, and the kind of the no frills side of it. How do we help you manage your wealth so that you understand what's going on? Now, Mitch, we do have a couple of questions that, themes and questions, because you do a lot of these calls, mate. Maybe if you run us through these, and then we can just take any questions as they come. So if you're watching now and you want to ask us some questions, Justin, we'll see that one about nicknames on a feature. That's great. We'll take that and run with that. But Mitch, over to you, mate. What are the things that you're talking about?
Yeah, so predominantly for myself at the moment, on the topic of people actually looking to add to their Rask Invest portfolios, a lot of people want to do so. They want to make contributions, but they're wary, or not wary, but they understand that there are brokerage costs. Because for a safety mechanism we have, everything happens on a holder identification number, a HIN, in your own name or your SMSF's name. So we're transacting directly on the ASX for you. And so there are brokerage costs associated with that. And that's the transaction is $4.40 or 0.088% of the transacted value, whichever is greater. And so because of that, and because of the way our portfolios operate, individual investors want to know, hey, should I add $200 a week or $400 a month? Or should I add on a quarterly basis, etc.? So and generally speaking, with Owen and myself, we do say in this instance, less is more. And so if you essentially will reduce your brokerage costs, even though there are systems in place in the portfolios to prevent overtrading. You can reduce your brokerage costs by adding less frequently. For any investors out there that are actually watching this, just get in touch with me as well, because I've developed a little spreadsheet where you can it's got all their trading rules built into it. And so you can say, hey, if I'm going to add $1,000 or $5,000 to my portfolio, what ETFs is this going to buy, and what's my brokerage going to look like? So you can actually do a bit of it's just based purely on the rules that are in the port built into the system, and you can use it as a bit of a proxy to see what might happen with different contributions you're looking to make. So just reach out to me, mitchell@rask.com.au, and I'll happy to send that your way.
Yeah, because that is one of the things that we've got feedback on so far is once the money. So everything to do with Rask Invest is basically automated, which is what makes it so powerful, because you can get in good savings habits. But people then go into their platform, like into their Rask Invest account, and they want to know, well, why is this ETF showing up at this amount and these types of things? And we're actively behind the scenes trying to manage that all for you and trying to make sure that it's not just a robotic process. And we're trying to make you understand and help you understand how these things happen and why we chose the HIN-based model instead of custodial models or things like that, which might split up your money in different ways. And so in terms of those contributions, Mitch, you said, like, if you're a new investor, you can reach out to you if someone's listening to this and they want to understand how that works. We talked already about the in-specie transfers and how those are particularly suited for existing portfolios and investors with larger amounts of money. This one, how often should I contribute? I'm just curious, what is the average investment size? I normally ask you this each month on the show.
It's creeping up. Average investment size now, I believe, is approximately $57,000. The average contribution, this is just judging off the off those people who've turned on the regular monthly contribution plan.
Yep.
That's about $750 a month. Okay. That people are adding automatically to their account. That would increase, though, if I did add in there's a number of ways you can add to your account. I know a lot of people are choosing to go with an automated BPay payment at their end. So they set up this automated BPay payment on a date that makes sense for them. It can be weekly, monthly, fortnightly, quarterly, and any day of the week, whereas our regular contribution plan is pulled on the 15th of every single month. So that might not suit some people. There's actually a fantastic conversation started over the weekend in the Rask community. I don't know if you saw this one, Owen, but I really appreciated it. Actually, it was someone saying that they felt they fell outside of the. It's that one. Just go back up. Keep going. There you go. There. They felt like they fell outside of the financial norms because they've always worked shift work, contract work, et cetera, so they don't have that certainty all the time of that cash flow, knowing that, say, the 15th of every single month they can be there to have a regular contribution plan drawn. So that was really interesting, and so there's multiple ways that people can contribute to their portfolio. So if we added those back in, the average would be much bigger than that.
Yeah, okay, that's very interesting.
I don't know if you saw that one on the weekend. I really liked it. Yeah, it was a good conversation.
Well, as someone who spent the majority of my life self-employed or working as a contractor rather than a PAYG, that's definitely something that's appealed to me and my family growing up with tradies and what have you, and business owners. Like, that's always been the case. And I don't know if this is a bit nerdy, so apologies for going down the rabbit warren here.
I'm sorry, but I'm thinking if someone's watching this on a lunchtime Monday, they don't mind the nerdiness, Owen.
Oh, well, that's fair. Yeah, welcome. You are welcome here. Even adding money to your own super fund up until about 3 or 4 years ago was basically impossible for people that were self-employed. Like, you had to fill in forms, you had to prove that X% of your income was this amount. It was just terrible. But now we're starting to see many more tools cater to that. Even Pocketsmith, who is a sponsor of our finance podcast, has tools in place for that and automates like the reconciliation. Even if you get a lumpy payment, it can help you smooth your kind of emergency fund and your forward planning, which is often the part that people struggle with the most when they're self-employed. So those are all very valid topics. There was a question that came through. Oh, actually, maybe before I get to that, just quickly, we basically, if Mitchell spots common themes in the community, people saying similar things, what he basically says is, he says, Owen, what are your thoughts on this? Go away and tell us what you think. I go and write it up or do a podcast on it and produce that. So if there are things that you might hear us talk about each month, they do kind of recycle back into helping other people invest. So a few of the things, obviously paying off your mortgage or investing, that's a very popular question. So we've surfaced something on that. Downsizing or lump sum payments into Rask Invest. There's an article for that. They're both available in Rask Invest. But then the third one is even on the tax advice and structuring component, we've had a lot of people come to us and talk to us about, basically, with superannuation rules changing so frequently, and people like myself having a family trust. We've talked about this before. Different investment companies trying to manage tax, trying to transition their wealth from property and get it ready for changes in the concessional contributions or non-concessional contributions in the super, setting up an SMSF, all of these types of things. We've actually, as a result of that, you guys are the first to know about this. We've actually formed a partnership with the two guys that host our business podcast, and many of you will be familiar with, Grey Space. We're forging a partnership with them where we can bring more tax advice just specific for investors into the community. And so you'll start to see us also produce more content around how you can structure your finances from a tax perspective. Because one of the things that happened this month, or last month, I should say, is quite a few investors went through our pipeline to get financial planning advice, when really what they needed was tax advice. And the difference was about $9,000 in fees, most likely. So we thought, no, what you actually need is not full financial planning advice. You just need to speak to an accountant who can set you up with the right structure and give you the tax rules. And people aren't aware of that. And that's what we talked about at the top of the show. So don't be surprised to see us do more of that. Now, there was a question that came through from Seals Travel, which is, some good bond ETFs out there. Yeah, so basically the two biggest bond ETFs in Australia are the two ETFs that we hold. And there's two very specific reasons for that, but I'll just highlight them in a different color, like say red here, even though I don't like to use red in finance. So this one, which is the IAF ETF, this is the Australian one, and then this one, which is global bonds, but predominantly USA. These are both government bond ETFs. So I'll just put a G here for government. There are ETFs that sit in a different range, if you will. So if we think about a spectrum of like least risky down the left-hand side to most risky up here, up this side, you'll have things like emerging markets shares. So an example of that would be like this thing here. Down the very beginning, you probably have your grandma's jar of money buried in the backyard, although you could probably still lose that. So something like a term deposit, a government-backed term deposit would sit like right here, a TD. Then you've got AAA, which is basically like a bond in that it's just 30-day government deposits. This is the most popular cash ETF because it yields the most. It's different to the other cash ETFs in that what it does is it takes your money, puts it in term deposits and high interest savings accounts, whereas the other cash ETFs tend to put it in slightly weird things. I think they did it because they wanted to put some special sauce on it, but it's actually resulted in a worse product. So there's that. The next cab off the rank in terms of if we go one step riskier, we're looking at government bonds. And this is where you could probably put both IAF and VBND because VBND is hedged. I'll put VBND up the top here, VBND. So these are government bond ETFs. So these are the two leaders in that space. There's also an alternative in Australia called VAF from Vanguard, slightly higher fees and a few other slight changes in things like duration. And then there's also VIF from Vanguard, which is their version of their other version of VBND. I wouldn't go with that. VBND is more diversified. That's why we went with it. You get a better, what we call duration mix. I don't want to bore you too much with the details. If we go one step further, the things that we do not have in our portfolio at the moment would be things like credit ETFs. So there's some in Australia called like Sub D was one that we had recently, but we sold out of Sub D. So this thing is kind of like bonds in that it pays your income stream and it reacts to interest rates in a way, but it's not as sensitive to interest rates because a lot of the payments you get are variable interest rates, kind of like a variable home loan, whereas this is like a fixed home loan that goes up and down. Moving along, we don't have any of these in our portfolio. Moving along, in here you would probably have Aussie shares, like blue chip shares, like the big ones, like VAS or A200 or STW or IOZ. Then you'd probably have like US shares. There's some currency risk, but you would probably put things like IVV in here or VGS. And then you go into those more like small cap shares, emerging market shares, those types of things. So what we're basically saying is we're using cash and government bonds, and we're not using this thing in the middle because they won't benefit from interest rates falling. And they are a bit riskier, even though they offer higher yield, that they won't grow as fast. So we think the best expression principle is that use this slither of the portfolio more and this one down the end here, which is safer again, because you'll get in total returns, you'll get a better outcome by mixing these right here with this stuff up the end here. And that's basically how we've built the portfolio, but it relates to the bonds sitting in here, government bonds sitting in here, and then there's like the floating rates or the variable rates credit type things in here. You probably heard a lot of people on our podcast talk about credit. That sort of thing sits in here, and you have to be very careful about how you go about getting that exposure. We can do it, but we don't do it at the moment, and don't be surprised to see us do it in the future once the interest rate cycle is played out. I hope that adds some understanding. Sonia, you've said, I hope I'm pronouncing that right, by the way. You've said, is there brokerage costs for AAA? So all of these things will have brokerage costs, but the benefit of using Rask Invest, see, a lot of people haven't figured this out yet, is that our brokerage costs, we don't make any money on it. We just buy the ETF for you. We don't make a profit from brokerage costs, unlike every stockbroker. So we can offer that, Mitch, for, is it $4?
It's $4.40. $4.40 per transaction, or 0.088% of the transacted value, whichever's greater. So no, I think I know where you're getting at with re AAA. Like, so if you were to go out there and get your own term deposits, for example, of course there'd be no brokerage costs. There'd be other costs too, like i.e. like time and administration for yourself. The reason why we use AAA and why a lot of the industry would use AAA, when your cash sits in a brokerage account, you often earn little to no interest on that. And so if we're having cash as an asset class on a platform in an investor's account, it makes more sense for us to hold an ETF and pay the brokerage in and out on something like AAA, so we can earn a better rate of return for our investors. But we don't have to go too far back. My previous portfolios I operated, when our cash rates were our interest rates were quite anemic before the recent jacking up of the interest rates here. We don't have to go too far back when I know the high growth and high growth portfolios that I operated. We actually swapped out AAA and just held cash, actual physical cash, even though it wasn't generating a return, because the actual yield on AAA that we were receiving didn't justify the brokerage fees of buying it. So yeah, you do have to pay brokerage going into AAA, but it definitely has a tangible benefit to a portfolio.
Yeah, and so that's spot on, Mitch. So the key thing for me was with this $4.40, people are might say, well, there's still brokerage fees if I invest via Rask Invest. Yes, there is, but we're probably offering it on a HIN just as cheap as anyone that you can find, and so if not cheaper. So the reality is, just even from that perspective, it makes sense. But with all of these, they're all ETFs. They're all investment products, and so we have to go and buy them. Is if that makes sense. And so we use AAA right now for a cash holding, because if we can get a 4.5% yield on cash, that obviously that's going to overwhelm the fees and everything for holding it. But there may come a time when we want to take more of that money out of AAA and put it into something else. So, for example, we can see right now, if I can use the keyboard, there we go. So we can see that over the last 5 years, Australian bonds have performed really poorly, and that's because interest rates have gone up. Now that there's talk of interest rates going down, we could start to see the reverse, as well as higher yields flowing through these ETFs. And so we could start to see things like this, plus the interest rate return, which is really, really, really appealing for people. So basically what I'm saying is, if you can put some money in bonds like we have, you can effectively, you're probably looking at, mid to high single digits in total return terms if the whole interest rate going down type idea continues to play out. And that's important because as we build the portfolios, there may come a time when the growth component, being when you look at an ETF in Google Finance, this bit right here, is no longer looking like it's going to be positive into the future. There probably will come a time, and that's the difference between bonds and just cash. And so at that point in time, what we might find is we might go, well, we'll put more back in cash, or we'll put more in different types of bonds, or we can move our cash around when interest rates fall. So for example, if interest rates fell to 1% again, we're probably not going to have as much in this. We're probably going to put some of this into something like this, like a little bit, so that whatever little bit we put in there is equivalent in return to the little bit of return we get from cash right now, so that we can maintain people's return over the investment cycle. And so that's how you maintain and build a retirement portfolio, is just being aware of that. There will be seasons where cash is better, bonds are better, these things in between, a little bit of credit is better, a little bit of property is better, all of these different things. And we're going to try and massage the portfolio through time to achieve the returns that we want to achieve, particularly for our retired clients or the people that are transitioning to retirement, rather than just growth. I hope that makes sense. You said that Jordan from Grey Space was wonderful to deal with. Oh, okay. Jordan said he spoke to someone last week, Mitch. So that might make sense. I get it now.
I have connected Jordan. I've maybe jumped the gun. I've connected Jordan to a couple of people that I've spoken with in the last few days.
Okay.
Soda and I have had a couple of good chats recently. So.
Oh, that's great. That's great. There was something else that you maybe mentioned for me before I've got one extra slide here that I wanted to share with folks and we want to cover off on before we move on. But Mitch, did you want me to briefly explain? I wasn't sure if you want me to do this, the yen carry trade.
I think that was a joke.
Okay. Okay.
Don't worry about that.
Yeah. Okay. Well, if anyone's interested in what the yen carry trade meant and what it meant for investors in early August, I can explain it to you in the Rask community. But over the next month, here's some behind the scenes of the things that we may be working on. So going forward inside Rask Invest and also a revamped Rask Core, you'll probably start to see more specific ETF and company-related stories. So write-ups, reports, these types of things inside your account. So when you log in, what that would look like is, so when you log into Rask Invest, you would see it on your dashboard. So when you log in down the bottom here, you'll see different stories, updates, these types of things. So that will all be appearing in there. Every Monday during this time slot, Mitch does his walkthroughs, and Mitch, you're starting to get a bit of a audience.
Yeah, the last one was really bad, but I know. I know I said to everyone that the first one would be the worst, but I don't know. And also, I'm actually on leave next Monday, Owen. So you'll need to step into the.
I'll step up to the plate.
So see if you can knock a terrible one out of the park. I did see a comment on one of them, one that I thought I did pretty well. Saying that these just seem to be promoting Rask Invest, blah 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 blah. Look. If you're tuning in midday on Monday, it's literally in the title that it is a Rask Invest walkthrough. So I do apologize if it's a bit Rask Invest heavy.
Yes.
But I try to answer questions and make them relevant so any investor can jump in and get something out of it. And it's not just a straight up Rask Invest walkthrough, but that is the point of them, because I get a lot of people who, and quite rightly, want to see what an account looks like before they actually go ahead and invest with us. And this is one way to do it and learn something about investing as well.
Yep. So that's every Monday. So that's specific to the way we're designing the Rask platform and what Mitchell and I are working on. So if you think about it, this is more for assessing the investment side of Rask. But this one that you see on a Thursday, which is now booting up, and I think it's going to be massive for not just our paying clients and our investment community, but just everyone that wants to learn and understand their financial situation and make good change. This is what you'll start to see more of, which is this Rask Invest Live. So this is, if you were a marketer, this would be like if you had a marketing funnel, this would be at the top. This is what people are like coming for to see. And you can play along. We have fun, we laugh and do all that, just like we do here. But this is more like, let's actually talk about the specifics. How does this actually work to give you comfort around what we're actually building? So that's the key difference. So I think they're great. And Mitch, like you're doing some good stuff over there. So that's on a Monday. Mitch is on a Monday. I'm on a Thursday.
Look, I'm nowhere near as polished with Owen and like he's Mr. Squiggle here.
Look at this.
Stuart's got a really good question. Will the learner have a minimum investment amount, and does it come with kids' education and advice? Because kids might not always listen to their parents, but they might listen to someone else. Stuart, it is going to have a lower, stop me from talking out of turn here.
No, you're right.
It's going to have a lower minimum investment amount because, not everyone's got $20,000 to start a portfolio just for their kids. Regarding the education side of things, that's something that I would like to do, maybe not in a formal way. I've actually spoken to a lot of people just in my one-on-one conversations as they're looking at Rask Invest, and we talk about, this is more for teenagers. I'm not talking to my 2.5-year-old about how he does not care about how he can invest. I did look up. He's got this absolute obsession with this particular brand of train and train tracks called Brio. It turns out to be a German-owned company that Ravensburger, the jigsaw puzzles. I was trying to get him, seeing if I could buy some shares in his little trains, but alas, it's family-owned. But so I've been talking to individuals about how they could maybe get their kids involved, and we've been workshopping individual stocks that you could give your kids homework on. So for the shopping centre, the general, if you're going to a Westfield or something like that, is fantastic because you can go to Peter Alexander and Smiggle. And you've got Premier Retail.
Premier Investments.
Premier Investments, that's it. You've then, of course, got the supermarkets themselves, which are then jam-packed with all sorts of products that are from listed companies like A2 Milk, etc. If you've got young girls in your household, Lavisa. Yep. The jewelry store that every single parent of teenagers seems to know about, and they are a bit surprised when I say that that's publicly listed. JB Hi-Fi, a retailer, absolutely knocking it out of the park. So you can start talking to your kids about these things and maybe getting them to understand how they make money is a great way to start the conversation.
Yeah, there's some great points there, Mitch. One of the things that we're working on at Rask is we've got our accounting partners, we've got our advice partners, we've got what we do. So what you're going to see from us at Rask Invest, Stuart, and everyone watching, is you're going to be able to download things. You're going to be able to access things. You're going to be like, oh, here's the guide for investing for kids. That's why when you look at what we've done and how we mentioned earlier on, if Mitch comes to me or to anyone in the team and says, hey, we're getting a lot of questions about whether I should pay off my mortgage or invest, or can you actually do the numbers for us? We're looking at transitioning in retirement, and we've got this big lump sum from our property. Where do we put $300,000? Can you invest that in ETFs? So those are the types of things. And even with our accounting partners, what we're going to get them to do is we're going to hand them a document that they can explain to you, because they can't give investing advice, but they can at least understand what it is that you're invested in if we give them a document to go along with your appointment, so that they can understand. You don't have to go to them and say, oh, I don't know what are the right questions to ask, because the right questions to ask will be on the form. And so we're going to try and do that. And one of the things that I've realized with educating not just kids, but other people in your life, and Mitch, you're probably still a bit too early on this journey, I'm guessing, but what I've found with this is most of the time, it's not you that does the converting. It's the peer group that does the converting. And we saw that with our events last year, actually, which I'll bring up. That's an interesting segue. Last year when we ran our events around Australia, it was actually just getting the plus ones to come to the event that made them realize that whoever brought them to the event wasn't crazy. And this is actually something that can be fun, it can be enjoyable, and it can actually be a really interesting thing for people. So what we're going to try and do, Stuart, and I think it's a great idea that you've touched on, is how do we help you stimulate those conversations, whether it's not just with your kids, but with maybe it's your parents, maybe it's your sister, maybe it's your whatever, your niece, your nephew, doesn't matter. How do we stimulate that conversation? And we do that through Rask. We've got, thankfully, overnight, we enrolled our 30,000th student into an online course. And so we are obviously going to do everything we can to try and champion people in that regard. That will start, obviously, this month. We're actually going to rebrand Rask. So it will keep the name, but everything that you see visually is going to change. I was going to ask our designer if she could give me some of the designs to share with you today, but she probably wouldn't have felt entirely confident when they're not fully cemented yet. But you're going to see a change to the Rask brand overall. There'll be modest changes to Rask Invest. The core technology platform and everything about it remains the same. Nothing actually changes from a security or risk perspective. It's literally just the look and feel. Rask Core will be updated, which we've already talked about. The education platform will also be updated, and it'll be easier to enroll in a course. Our podcast look and feel will also be updated, including this Mr. Squiggle that I'm using on the screen right here. I don't think anyone would let me get away with this for too long. And this is where it ties in with the events. We are planning some casual events or meetups, maybe like a live podcast, and then just have some food and drink in Perth, Brisbane, Sydney, and Melbourne before the year's end. We haven't confirmed dates or anything like that yet, but it would be more casual than last year, which were kind of like bigger events, particularly the one in Sydney. I think it was 400 people or over. It probably won't be that big in Sydney this year. It's just a bit logistical to put together, but we're going to try and get out and meet everyone on the road. Now, that's really just a kind of look behind the scenes. Obviously, you can head online. You can invest with us. Obviously, Rask Invest is just invest.rask.com.au. You can email Mitchell. You can jump in the community and ask questions. It's great because people use the community as kind of like a free Amazon reviews of Rask Invest. They just dump their, here's what I'm thinking about Rask Invest. What do you guys think? And then other people who have invested or not chime in and have their 2 cents. The PDS and TMD are available online. Finally, Justin asked a question. Could you transition from Luna into another portfolio such as Jupiter? Well, that would be the hope, Justin, is so that as the portfolios are built, they're built in a similar way, but they won't be identical because from an investment minimums, from that type of perspective, they won't be identical. But over time, they're going to probably be made in a similar way so that you could effectively just change the investment strategy for that one profile to say Jupiter. If that makes sense.
Yeah, I know right now we do, Justin, yourself included, have some people who are invested in Jupiter for their actual kids. And so would they like to, can they transition down? This goes for any of our portfolios. You can go from Jupiter to Martian if your circumstances change. It's all done within the one account, and we just rebalance exactly what we need to rebalance. So, if it holds VAS and just the one down holds 10% less VAS, it'll just be a trimming of that 10%. So yeah, absolutely. You can easily transition down through the portfolios. When Luna comes along though, let's have a chat and see if it's the preferred option. But absolutely you can do that.
Yeah. That's a good one. A final question from Unlucky is just if you have, could you invest in ETFs for a home deposit? Now, this is a question a lot of financial planners get early in their journey. The reality is we always say at Rask that a long-term investment is like a minimum 3 years, but ideally 5 years or more. And the reason is even if you use a balanced or diversified portfolio, you got some bonds, you got some cash, it will be smoother. There's no doubt about that. It will be smoother than what people have done traditionally, which is where they just use shares. It will be smoother than that ride, but it will still go up and down. And that's probably the key distinction is there are no guarantees in investing, whereas in saving your money in a government guaranteed bank account or term deposit, there are some guarantees. And the fortunate thing for most home buyers, particularly young first homeowners at the moment, or even older first homeowners, is that the interest received from a term deposit right now or a savings account, Mitch, is 5% or more. And so in reality, there's no urgency to push into the stock market like there was previously. Of course, people just hold off investing. They think, oh, well, I'm getting a 5% investment from return from my savings account. Why would I invest at all? I think that's a mistake. I think that should be investment money. But when people have a defined outcome in the near future, which is buy a house, I don't think people should be risking that. That maybe one year we have a bit of a downturn in the stock market, and they've got 10% less deposit. So that could have ramifications. So I don't think that that's wise, but definitely for long-term investing, a diversified portfolio, in my opinion, will beat a cash or a term deposit heavy investment strategy. But in the short term, I would be more inclined to have less risk, if that makes sense, Mitch.
Yeah, if anyone here has ever had a conversation with me, I bang on about time frame a lot. So I think time frame is an incredibly important thing to consider when you're investing in the market, because investing time is your best friend. It's your secret. It's your secret weapon. You can stay invested for a very long period of time. Now, just because someone's young, though, doesn't always necessarily mean they're jumping into a high growth portfolio. Just because someone's older doesn't always necessarily mean they're a conservative portfolio investor. You have to sit back and think about that time frame and what the impact of the volatility could have on your portfolio. Absolutely, the last thing I'd ever want to see someone do is, won an auction, they've got a 90-day settlement, and they go to withdraw their funds from the share market, and you experience a 5% or a 10% drawback. That'd be absolutely devastating. So yeah, every single investment product you'll see out there, be it a managed fund or an investment service like Rask Invest, each portfolio will have a recommended time frame. If you're only going to pay attention to one thing, other than the PDS and the TMD, of course, and our disclaimer, is that recommended time frame. Check it out. They're not there. They're there for a reason.
Yep, Mitch. It's actually shown here in our TMD on the page. It actually shows the different time frames that we suggest for each portfolio, and that's not because, like, we hope and we think that the portfolios on average will go up most years, but there might be that one year where it doesn't and everyone freaks out. So that's probably what I would say with that. And I know we've got to run, but the final thing that I'll conclude is that I was actually an investor that I know actually did the extreme of what you just said, Mitch. They actually put all their money in crypto last year, knowing that they were planning to buy a house this year. But it turned out that crypto was actually a scam. And they were actually sucked into a Ponzi scam. And I'm talking hundreds of thousands of dollars. And fortunately for this person, they have a lot of money, meaning that he's in his 60s, and he was kind of buying their forever house. And but the net result is I don't think he'll get his money back. And he's now got a bridging loan for a few $100,000 until he can sort it out. And so, the reality is those are the worst case scenarios. And we don't say that to scare you. It's just to be realistic that, if you've got your time frame, just work backwards for what's most appropriate and be conservative. But we've got a lot of questions that keep bubbling up inside the Rask community. You can jump over there. If you're new to investing with us, you can head to invest.rask.com.au to learn more, access the PDS and TMD. Don't forget that anything that we said here today is general in nature and does not take into account your financial needs, goals, objectives. We do have a way to get in touch with financial planners via our platform, as well as the guide on how to do it yourself, how to find a financial advisor that's appropriate to you. Mitch, heaps of fun. It's always good to chat. We'll be back next month, and also this Thursday for the Rask Invest live shows, Thursday at midday, if you do like the live YouTubes. So, mate, absolute pleasure.
Thanks, Owen. I'll catch you later, mate.
Bye for now.
Cheers.